This trade hit my stop loss, but I still walked away profitable. And the reason why has nothing to do with being right about the direction. In this breakdown, I'm going to show you exactly how I managed risk, took partial profits, and protected capital, even though price eventually reversed against me. In this video, you'll see the higher time frame bias I use, the liquidity narrative that we build, the exact entry trade, and most importantly, the management decision that made this trade profitable at the end of the day. Because I'm learning that in trading, entries don't make you consistent. Risk management does. And a quick reminder that this is for educational purposes only and not financial advice. With that said, let's jump into the chart. As we head into the New York session, we can see on the 15-minute time frame that we're clearly bullish. This is our swing high, and then we have our swing low right here. We have identified a weak high, which is also London high, because it hasn't taken the external liquidity below. Yes, it took Asia low, which is another form of internal liquidity, but the fact that it wasn't able to take the external low tells us that this is still a weak high. So my thesis is simple. Price will run the internal liquidity and then reach for external liquidity. That's the narrative. Now let's rewind the session back to the New York morning hours. So here we are a little bit before 9 a.m. Eastern, and we see that price eventually does take that internal liquidity that we had identified. That's my signal to drop down to a lower time frame. So here on the 1 minute, we're looking for demand to be overrun by supply, a shift in structure that confirms that sellers are starting to step in. And for me, that point is right here. This is the last demand zone on the 1 minute that created this aggressive move up. If sellers can overrun these buyers, then that's my signal to enter. And we finally get the break right here after 9:30, which is important for volatility. In terms of an entry, I now drop down to the 5 minute to see what I can target. Immediately jumping out at me is this fair value gap that was inverted by the selling pressure. That becomes my entry model. My entry goes above the inverted fair value gap, and my stops right above these highs. Before price even tags me in, I want to define my profit target so I know where I'm going. Profit target 1 sits right above this fair value gap. It's an area where potential resting buy orders could be. If price reaches that point, I want to get paid. PT2 is a little bit further down in this area, which would target continuation into New York session lows. But PT1 is the key that I want to make sure I track. If we play price out now, we see that price will eventually tag me in, and then we will eventually get this aggressive move down into our profit target 1 area right there. I take partial profits immediately, and this is where the trade is eventually won. It's not the entry and it's not the bias, it's the management. After taking partials, I can move my stop to break even. Now I've realized gains and I have zero downside risk. From here, price starts to slow down and it turns into a battle between buyers and sellers. And that's information that we can use. Eventually, we get the aggressive bullish engulfing candle up, and price comes back, stopping me out at break even. And if we let price play out, it eventually goes into drawdown and would have eventually stopped me out. On paper, this looks like a trade that failed, but it didn't, because the objective isn't to perfectly predict. The objective is to extract money whenever the market offers it to you and protect yourself when it shifts. If I hadn't taken partials, or if I hadn't moved to break even, this would have been a full loss for 1%. Instead, it was a controlled and profitable trade. That's the difference between gambling and trading that I'm trying to master. Right now, I'm not focused on perfect entries. I'm focused on discipline and consistent execution, because protecting capital is what keeps you in the game long enough to be profitable. If you're on the same path, building structure, patience, and real skills, then subscribe. And if you want to see another breakdown where I apply the same framework, check out this video right here, and we can sharpen our edge together. I'll see you in the next one.